Good morning, everyone, and welcome to the European crossover webinar. And as you can see, we're still up right up here, close to the highs in the indices across the board. We did go on and move higher yesterday, and we did even get NASDAQ to close above 10,000. You can see we're currently above 10,000 on the NASDAQ. So we're continuing to see the indices move higher. Today is going to be FOMC day, so we'll have to see what the Fed says. And regardless of what they say, we're not really sure how the market's going to react. I think that we probably, they've exhausted what they have as far as options. But once again, we'll just have to see how the market reacts. There hasn't been anything to suggest any signs of reversal at this point. We have seen a little bit of concern with the XLF and HYG and BKX. They did go on and gap low yesterday. They came back up a little bit, but once again, other sectors are still relatively strong, so we can still go on and push higher. And once again, we'll have to see how much further we can go on and push higher here. When we look on the weekly, we are above that 32.14 in the SPOOs, and obviously in the NASDAQ. And this is on the Dow, but we're above this 27,169. Looking at the NASDAQ, obviously all-time highs here. So nothing here to suggest that we're running into any type of trouble. When we take a look at the data, nothing to speak of until we get into the U.S. session. And we do have CPI at 8:30 Eastern. And real weekly earnings. And that's going to be about it until we get the FOMC announcement. So once again, nothing until 8:30 Eastern when we get core CPI. And we'll just have to see how the market decides to react to the announcement. We'll have to make a determination to see what happens at that point. Hard to tell. I mean, we could maybe make another push even higher. Depending on what the Fed says, we could get maybe a little bit of a blow off top here. Not a top, but a blow off here where we really take off and squeeze and knock some people out. I have heard some talk about 3,300 in the S&Ps. We're just going to have to wait and see. I mean, especially with the SPOOs and Apple at all-time highs, impact in the NASDAQ, among other tech stocks, the FANGs, certainly going to go on and keep the pressure up. So with that, we'll go and move on into the news. Australian New Zealand dollars pause near highs, economies reopen. The Australian New Zealand dollars consolidated on Wednesday as their recent rallies ran out of steam, though the rapid progress being made in opening their domestic economies underpinned sentiment. The Aussie dollar had paused at 69.66 after an 0.8 drop on Tuesday. Ended an 8-session winning streak, but it was still not far from the 11-month top of 70.43 and within striking distance of resistance at 70.82. The Kiwi steadied at 65.21 after easing 0.7 overnight from a 5-month target of 65.80. It has support around 64.70. Both countries have proven relatively successful in containing the virus, with New Zealand having essentially stopped all new infections, essentially allowing the entire economy to reopen. Even professional rugby players will return on the weekend with stadiums packed full of fans. Surveys out from Australia on Wednesday showed consumer confidence had rebounded to pre-lockdown levels, recalling all of the historic collapses seen during April. All signs continue to indicate the Australians want to get back to normal, said ANZ economist Hayden Dimes, citing a raft of timely data from foot traffic to web searches. People are out and about, booking restaurants and looking for places to visit. They're searching for cars to buy and thinking about home renovation. As a result, spending on ANZ payment cards was up 4.3% the week of June. CBA reported spending on its cards was 5% higher than in the same week last year, with personal care jumping as beauty sector reopened. Markets are now awaiting the outcome of the U.S. Federal Reserve policy meeting later in the day, with much attention to its dot plot forecast for growth and interest rates. Fed Chair Jerome Powell is likely to be questioned about the chance of negative rates as of measures to control the yield curve, as Japan and Australia have done. The RBA set a target for three-year yields of around a quarter basis point, and so far has managed to keep them within 5 basis points of that goal, even when not buying any new paper. And the dollar falls as nerves set in before the Fed policy decision. The dollar fell against most currencies on Wednesday amid some speculation the U.S. Federal Reserve could take steps to curb a recent rise in bond yields in a policy decision later in the day. Australian and New Zealand dollars extend their recent rally against the greenback as investors continue to cheer resumption of economic activity in both countries following the lifting of coronavirus restrictions. The main focus is the Fed policy meeting later on Wednesday. While no major changes are expected, recent rises in yields have pushed the dollar due to increasing signs that the U.S. economy is slowly rebounding from the health crisis shock, though a full-fledged recovery is still distant. Some analysts are playing down the chance the Fed will adopt a yield curve control to guide the 10-year yields lower, but uncertainty about the outcome of the Fed meeting could keep the dollar under pressure. The Fed can't afford to wait and see on a yield curve control because the U.S. economy has gotten past the crisis phase and only entered the healing phase, said Masafumi Yamamoto. The markets got overly optimistic and are adjusting lower, but this is a good chance to buy the dollar on the dip. Against the pound, the greenback fell to 27.60. The dollar also fell slightly. Let me see here. Kind of lost my train in here. Fell slightly against the Swiss franc. The yield on the benchmark 10-year rates was little change at 0.8271 on Wednesday. Long-term Treasury yields fell on Tuesday, and the yield curve flattened slightly as traders adjusted positions before the Fed meeting. Central bankers on Wednesday will also publish their first economic projections since the coronavirus pandemic plunged the country into recession. Concerns about the progress in trade talks between Britain and the European Union continue to hamper the euro on the pound. The EU's chief Brexit negotiator, Michael Barnier, is scheduled to speak later on Wednesday, which may yield details that will help determine whether the market sentiment will improve. The Australian dollar rose to 69.95, approached 11-month high, and the Kiwi also rose to its highs since late January. The Antipodian currencies have been on a stellar run against the greenback due to hopes for economic recovery, prompting some investors to book profits. Some traders are worried about the deterioration in diplomatic relations between Australia and China, which has kept gains in the Aussie. With that, we're going to go and move on now to the analysis. As I said, there's no way of knowing for sure how the markets are going to go and react. So with that, bear with me. So there's, like I said, we already know that we're at all-time highs in the NASDAQ, close to these most recent highs here in the S&Ps. Dow futures are above their 27,169. So at this point, it's just a matter of just doing some analysis on the currencies and see where we go, and that'll be it. The only thing is, it's just a waiting game until FOMC time. So the euro came back on Tuesday with resilience after coming close to buys chart support at 1237. Support will remain the same with resistance at 1411 if we see dollar-induced selling post FOMC. So I like this 1356, that weekly level, but if, once again, if the Fed tinkers around and pushes the dollar down, we could see a pop, and potentially that could get us up to 14.11. 1237 will remain the same. I guess what we can do is we'll do the 1356. So that's 1411. That's where we keep us in check there. Moving on. So the cable came back with a vengeance. Resistance on FOMC day will be 28.25 with support at 26.02. And boy, we're still trying to push a little bit higher in here. So once again, it seems like we've come up to, yeah, not a bad. So we've moved this up to 28.25. And this will be 26.02. Onto the Aussie. This Aussie sold off on Tuesday before staging a mild recovery. Resistance will remain at 70.27 as the dollar is susceptible to a post FOMC, and support will be 68.85. Kiwi paired back on Tuesday, just like its cousin, the Aussie. Resistance on Wednesday will be 65.94 with support at 64.43. And that'll remain the same here, the 65.94. Once again, if we get some dollar-induced selling post-FOMC. The dollar CAD continued to find support at 33.82. Resistance will be 34.92 with support which could dip as low as 33.18. Once again, we're concerned that possibly we could see that dip. So 33, we actually had 33.75 before. Let's see, we'll go with 18. And resistance 34.92. The dollar peso rallied on Tuesday with resistance, which will be 22.28, with support at 21.54. So that support continues to hold on at 21.54, and we're going to move this up to 22.28. Oh boy, look at this. This dollar yen keeps on still drifting lower. So the dollar yen fell to the bias chart support of 778 yesterday. I actually hit it right to the nose almost. I took it out by a little bit and then closed basically just under that. Support on Wednesday will be 736 with resistance at 845. So 736. And support at 845. I meant to say resistance. That might even be a bit of a stretch because right now we're at, wow, holy smokes, we're already at 723. We could press, but technically as low as here, down here, which is going to be 709. So we're going to have to move this down to 709. This has really come off quite a bit. And resistance is going to be right there now. 812 if we were to see a complete turnaround. So the dollar index continues on the weak path. Support on Wednesday will be 95.91 with resistance at 96.95. So 95.91. We said resistance would be 96.95. Yeah, that's fine. 96.95. You can see here the euro's pressing up in here. We haven't gone past that weekly at 1356. We're 13. Actually, no. Right now we're actually at 1360. So let's go back to this. Yeah, we sure are. Now we're above the weekly. There are some thoughts that we're going to make a jump above 114, clear out some peeps. If you were looking at this close, this would be key right there. 1436 and 1445, 1436. We'll see whether or not we make that jump up in here. And with that, we'll go into the cross rates. Well, we can see here that the Kiwi yen saw some further downside yesterday, and we did come down here to 69.74, which was our support. That was our support for yesterday. Yen's already fairly strong already. Tell you what, we're going to go and keep that 69.74, and the resistance is going to be right there, which is going to be 70.71. It's actually this high right there. Look at it. 70.67. So 70.67. Now let's go and move on to the euro yen. Saw quite a bit of a dip yesterday, even further. Yesterday we had 2106, which is still like that. That's a pretty good dip down already. So 2106 with the upside at 2223, and so far the high's been 2231. We'll stick with that. So no changes. did finally see the euro odd pick up a little bit here, and we actually just about came up here to the 64 cents. So potentially a potential for this to still continue a little bit higher. I'd just as soon give this the benefit of the doubt. That's 63.58. So it does have more higher to go. It's going to be 64.15. 64.15. I'm pulling that right from here. So 64.15. See right there. It's actually 64.26. But actually, right now we're still pretty weak, even though we had a pretty good strong day the prior one. Yeah, we'll go stick with this though, which is going to be 63.48. Got to crawl before you can walk. That came in nicely though, right there. 63.48, and then support is going to be this low right there, which is 61.67. And the Euro Kiwi, nice little turnaround, actually a bullish engulfing line. So support's going to be there at 73. Just a pair of touchdown there right there. 72.78. And resistance is going to be right there. 75.31. It's a little ways off, but if we can generate over the next couple of days, 75.31. And moving on to the Aussie. Pretty good down move yesterday. Still think there's potential for us to still work in a little bit lower, which actually here's that level. So that's actually going to be support, which is going to be 74.47. And we had 46, so that's close enough. That's fine. And on the upside, it's just going to be if we get a little pop here, right there, 75.74. And moving on to the guppy. Pretty good downdraft here, and we did make it here to this 36.39. We actually dipped just below that. That's actually going to be support. 36.39, which was support yesterday. It went straight down to that level. Took it out by maybe 4 or 5 pips. And resistance is going to be the prior day's high, which is 38.23. And let's go and wrap this up with sterling odd. Still continue to defend this 80.89. Support's actually going to be just right there, that hair there. It's going to be 81.40. We can now move that up. Since we're starting to build a little bit here, I don't think we'll get there today, but that's going to be a resistance going forward, 84.33. And that's going to do it. Um, you can see here, euros at 13.70. Cable's still pretty firmly bid there, 27.72. So some good dollar selling. Look at the dollar against the yen, all the way down to 7.29. Look at the dollar index down to 96.10. We've got support at 95.91. That might even get tagged before the FOMC. And then look at the Aussie, right there knocking on the door at 70 cents. So the dollar's just really just being taken to the woodshed. It continues to be taken to the woodshed. As I mentioned here, look at it's up and away with the NASDAQ at 10,000. Even the Russell up here close to these highs here. I did hear about a big options play with IWM, but it's a value portion of the IWM. Um, anyway, they're between now and next Friday, not this coming Friday, but the following Friday, they're looking for a 6% drop. Now that's what someone had bought a ton of options, buying puts and selling calls to help finance a bit of that. So they're looking for a 6% drop. So once again, we'll have to just be patient and wait, to see how these markets react. I mean, we've had such a phenomenal run. Look where we are right now. And whether or not we'll see a pullback. But look at this. This is just amazing right here. NASDAQ right on its highs. Still unbelievable. And the YM up still pretty good, strong here also. And certainly we're seeing it here with the SPOOs. So we could see a bounce up. Some people are looking potentially around 32.45. We could pop up into that 32.45 area here before we slide back, or that's what they're potentially looking for us to make that run here. And of course the YM. But that's going to do it. Like I said, we just don't know how far it's going to go on and take us here on the, once we get past the FOMC and how the market's going to go on and react, to whatever the Fed announces, where the Fed announces, okay, we think the economy's, so where they put, we think the economy's is doing much better. Okay, wham, buy the market. Or we think the economy still needs help. Okay, wham, buy the market. So it's almost like that right now, and everything's running on short-term momentum, so you have to be cognizant of that. But anyway, we're all going to be on hold until we get to the FOMC. So once again, shorter session because there's just not a whole lot of analysis as we just wait. We do have all of our analysis done, but at this point we're just going to have to go in and wait until we get to the FOMC, which is another 10 hours away, or actually 9.5 hours away, and see what transpires from there, and essentially how the market decides to go on and react from there. And obviously there will be a lot of impact across the board, whether it be with euro dollar, cable, dollar yen, dollar CAD, as well as the indices, SPOOs, Dow futures, Russell, or the NASDAQ. So good luck to all. We'll see you in the chat room, and thanks for joining us here on the European Crossover webinar.